Quick disclaimer, having emotional stability alone will not make you rich. You still need a vehicle to wealth. In this case, our vehicle is trading. So today we're going to answer why you might not be making money in the markets, even if you have a profitable strategy. So let's get into it. Most people think money is about strategy, but it's not. It's about whether you trust yourself enough to execute one. If you don't trust yourself, you will not be saved by the strategy, which takes us into point number one, real-time example. I once heard someone say, I can't invest long-term. I can't hold that long. Listen to that language. Let me explain. I can't is an identity statement. Hold that long equals emotional intolerance. Followed up by laughter is the way that the body regulates the nervous system when it feels discomfort. And in this case, it's an ego defense. Because think, who really wants to say, I lack the emotional regulation abilities to hold and invest my money long term to grow and build my wealth? Instead, people put it off in a very egotistical way, as in, and not purposely, unconsciously, they'll do it so the body doesn't have to feel compelled to have to go and make a change. Instead, they could sit in the same situation and say, well, this is what it is. In this case, in trading, we know we all have one goal in mind.
Het liefst heb ik over tots in een mansion, gas rook in een Lambo, de chain om mijn nek gaat Django.
In this case, in trading, we know we all have one goal in mind. We can't do that. That laughter wasn't confidence. That was a lack of internal mastery disguised as confidence. You have to understand that. The ego is always going to try to take part. You can't let that feed you into your whys and reasonings for what you do and why you do it. Only a true self-aware individual can admit that and then follow up with change. Which takes us to number two, the core principle. Your emotional regulation is literally the ceiling for your financial behavior. If you can't tolerate boredom, you overtrade. If you can't tolerate uncertainty, you panic sell. If you can't tolerate discomfort, you chase dopamine. If you can't tolerate time, you can't compound, which is the number one rule in investing and building wealth. Number three, misconceptions about internal mastery. Internal mastery is not affirmations. It's not pretending to be calm. And it's not something that you fake in the mirror. It is emotional literacy, how well you can regulate your nervous system, and the ability to sit in discomfort without acting. Rich behavior is boring behavior, consistently done every single day, even when it doesn't feel good. Money is literally just delayed emotion. So this takes us to point number four, why internal mastery will lead you to wealth. Patience, when there is no setup, you don't force one. Delayed gratification comes into play when you let a trade play out and you don't try to take out just to get a quick dopamine hit. Risk tolerance comes into play when it's time to scale up and you're not panicking or your nervous system is starting to feel your heartbeats pounding faster, you're sweating, you might be, again, sticky palms. All types of things happen when your nervous system starts to feel this discomfort because it's not used to that experience. Consistency comes into play every single day when you execute that same A+ setup day in, day out, again and again and again. Self-honesty, just like the example before, this comes in play when you need to tell yourself the truth and not trying to just protect your ego. Accumulating the wealth takes that, keep it simple, take risk. But keeping the wealth, keep it simple, manage risk. Totally opposite traits. You need patience, discipline, and you need to stay on path day in and day out again. And in trading specifically, we all know that price has to go up. Impulse, correct. Impulse, correct. That correction is you correcting your behavior. That impulse is after you correct your behavior, you shoot off. You see a new profitability showing up week to week in your trading because of those corrections, impulse, correction, impulse. You're literally just refining your emotional depth along with refining your strategy. But understanding it's not all about just strategy. So to sum it up, you don't need to be a genius. The market doesn't reward intelligence. It rewards emotional regulating abilities.